Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Jobs and earnings are what seem to be capturing investors' attention this week, and we're going to talk about that on this edition of the Roundtable with our whole cast of characters that is always here, starting with our Executive Vice President of Zacks.com, Steve Reitmeister, our Research Director, Shiraz Mian, and our Market Technician, Kevin Matris. And I say that affectionately, by the way, cast of characters. Nice. So let's start with you, Steve, because I saw something that you wrote here about the jobs report that came out on Friday.
Okay.
Overall, it seemed like you were, pretty happy with it, but you say the jobs numbers are still not where they need to be. Yeah. Where do you think they need to be?
To have jobs growth of 150 to 200, we would start eating into this unemployment rate. And I've seen some charts. If we were to have about 200,000 jobs added per month, we would get to about 8% unemployment in about a year and a half, 2 years, I think is what that chart says. It's not the fastest route to get there. We would like to have more robust, but it starts heading in the right direction instead of this kind of stall that we have going on. So just in short, the reason why it's good in the near term is because whenever you beat expectations, then that's generally good for the market. Mm-hmm. But in absolute terms, that adding just 100,000 jobs when 43,000 of those jobs are just from Verizon workers coming back from work, in absolute terms, it still has some question marks as to the vitality of this economy.
So is this mildly encouraging for you?
Mildly encouraging, but it's like, let's see what the next couple months have. Okay, so after having a zero, which was revised up to what, 50?
57, yeah.
Are we going to keep making our way back to 150, 200, or are we just going to sit here for a long time, or are we going to get worse? And that's what's important. What is coming the next 2-3 months?
Right. Shiraz, based on what you've been writing in your commentary, what seemed to be encouraging for you out of this entire report of last week was that the prior 2 months' numbers were revised upward.
That's right. It is a sign that the job market was not as grim as it appeared in those 2 months. And just adding a little bit to what Steve described on the job situation, I 100% agree that if you look at in absolute terms relative to where the market needs to be to bring down this mountain of unemployed rolls, it was not enough. But if we look at it from the perspective of all this fear about the U.S. economy heading into a recession, this is reassuring and positive in the sense that, yes, the growth may be slow and subpar, but it's nevertheless positive, and it's non-recessionary, and it's in that context that it's very positive for the market.
Kevin, what do you think?
Yeah, I mean, it wasn't a great report. It could have been way worse than what it was. So since it came in okay, I guess you're going to have to give it a very tepid thumbs up. But yeah, there were so many asterisks there that you can't get overexcited.
All right, let's talk about earnings now, because that's going to be coming up here this week, third quarter earnings season opening up. What about earnings season for you? Yeah. What are you looking for? Shiraz and I have already talked about it. It's about expectations.
Yeah, absolutely. And here again, low expectations are coming into this earnings season. I mean, starting right off with Alcoa, which reports Tuesday night after the close. 90 days ago, people were expecting 34 cents per share for Alcoa. Now that is down to 21 or 22 cents. That's quite a trimming, okay? Right. So here again, it makes a much lower base in which for them, or lower hurdle for them to clear. And I think there's quite a bit of that in other companies, maybe not as extreme as that example, but you see that over the last a month and a half, that estimates in general have been going down for corporations. And given where the economy's at, that it's not as bad as it appears, and Goldman and macroeconomic advisors both increased their estimates, GDP estimates, that I think that these are it's going to be a pretty easy earnings season to beat the very low expectations.
Shiraz, you and I have talked about in another piece, in your earnings outlook piece, also on this website, by the way, that it's about expectations for the third quarter. Are there any key earnings that you're going to be watching in particular?
I think the key element with respect to the third quarter is the extent of how many of these companies come in line or better than expectations. But even more important than that is the outlook that we will be looking for from these management teams over the next 2 to 4 quarters. It's the consensus expectations for 2012, which has this huge question mark written all over it. And as long as we don't have certainty and visibility and more conviction around the consensus numbers for 2012, we will have this iffy kind of behavior in the market. So other than Europe, now it's the questions about the sustainability of current expectations for 2012 earnings, which is weighing on the market. Any clarity on that will push us higher.
All right, Kevin, is that what we're going to be trading off of this weekend?
Yeah, I think so. In aggregate,
this week,
though,
I should say,
yeah,
not
I
this
think
weekend.
people really need to take a look at what those forward earnings are going to be, because if you were to look at Q1 of this year, the EPS growth rate for the S&P was 20%. Second quarter was 19. This quarter is supposed to be 14. Next quarter is supposed to be 12. And then in Q1 of next year, it's supposed to be 9, which is half as much as the growth rate that we started with this year. So people are really going to be looking at what the companies have to say looking out, not necessarily for one company or two companies, but in aggregate, that is going to give us an idea as to what's to come.
All right, let's talk about top stock picks here kind of quickly. Interestingly, you picked Apple, and I found that particularly interesting in light of the news of the death of Steve Jobs.
I mean, I took that pick, before the news came out, and I still feel just as sound about it. I mean, certainly it's a loss, it's because he was kind of an icon in business, but in terms of the company, if he truly was a visionary and a great business leader, then he should have built that organization to survive past, his lifespan, and that innovation should be part of their culture. One of the reasons why the stock was down before he passed away is because the expectation, so everyone was expecting iPhone 5, they came out with this 4S, and it was kind of felt anticlimactic. Yet today we find out that they had 1 million pre-orders for it in the first 24 hours, which beats previous records and certainly blows away expectations. So now shares are flying higher. So I've said in the past that this company is worth 550 plus. It's trading under 400. What more do I have to say?
All right. I guess nothing. Shiraz?
I have Plains All American. It's a pipeline master limited partnership. They are transportation of oil, refined products, and storage, and broadly the energy infrastructure business in general. Low risk energy infrastructure play with stable fee-based revenues. They should be growing distributions, what they call as their dividends, in the 5 to 6% range this year and next year. Currently yield about 6.5–7%. So a very good play for these times.
All right, Kevin.
Mine is Limited Brands, ticker LTD. They are a retailer wholesale. They sell women's apparel, they sell jewelry, all sorts of different stuff that you can imagine. They have 6 big brand names, though, under their belt, not the least of which is Victoria's Secret, Henry Bendel, Pink, a bunch of other things. What I like about them is this. They are a Zacks rank of 1, which is a strong buy. They have double-digit projected growth rates. Still, they have low and attractive valuations, but they are in the top 10% of Zacks ranked industries, which really gives it a head start because the top 50% of industries do 4 times as good as the bottom, and the greatest amount of excess comes within that top 10%. So if you were to look at where we are right now, we have resistance right around 41, but I believe we can get as high as 47.80. If we do, you're looking at a 16% price target, 16% profit potential. I like the stock.
All right, that's the latest from here. Don't forget other commentary and interesting articles on our homepage at Zacks.com. And with all these folks, I'm Terry Ruffalo.